Good afternoon. Today is Tuesday, June 27. The time right now is 5 minutes to 1 in the afternoon. Now, let's do a bit of a recap. Basically, the overnight market has been pretty quiet because overnight we don't have any major US statistics being released. And we're beginning to see the US equity continue to drift lower. Overnight, we can see that the Dow Jones actually drift to a low of 33,610, and this is just a whisker away from the ideal price in which I think the market will be susceptible to buying interest, and that level is 33,350 to 33,590 levels. But for all we know, the market could have already bottomed. So take it with a pinch of salt. If we see a rally from here, that opens up the possibility of another move higher. But there are two possible scenarios that can unfold as a result of this. Either the market goes down further to dip into this bracket of prices between 33,350 to 33,590, and then bounce to 34,100 to 34,215 levels before it comes back down to complete a larger degree three wave targeting somewhere around 33,000. That's one scenario. The other scenario is the market decided that it has already pulled back enough and it's getting ready for another surge beyond 34,590 levels. So those are two possible outcomes here. So not sure which one will pan out first, but I am leaning towards the idea that maybe we can see a bounce back to 34,000 and then come back down again before it gathers enough energy to try higher. So that could be one possible scenario. But because we are running a little bit out of time, I do expect the market to top up somewhere between now to mid-July. So if there's going to be any buying opportunity, unless it makes a lot of sense to buy at much lower levels, the risk of the market doing a reversal is pretty high as we goes into July, and we are not that far away from July. We are already at the tail end of June, and next week we're going to see possibly the move that I afraid might actually happen. Okay, so over in the S&P 500, we are also seeing an extended move lower, and now the bracket, unlike the Dow Jones, is already snugly in between the bracket of prices, which I think is attractive to buy. And this bracket of prices is between 32,960, 4,296 to 4,355 levels, and this bracket is right now we are seeing price is in the middle of this range now. The low traded overnight was 4,328, and this could be laying the groundwork for a rally attempt later in the afternoon. Later tonight. Over in the Nasdaq, we are also seeing a potential three-wave pullback here from a high of 15,000 to 84.65, and this does not look complete to me, and we could possibly see a further dip in the Nasdaq tonight towards ideally the 14,440 levels to 14,560 levels. This bracket will be ideal for buying, and after that, there's a very good chance that the market may actually want to rally again. And if we do get a rally beyond 15,285, don't be surprised, but I think this could be the tail end of this last attempt to rally. I think there is that possibility market may go as high as 16,115, but let's see what happens. Okay, over in Asia, we see that the Nikkei 225 continue to drop, but this drop here does appears to be so far three-wave, but this three-wave here have a structure that you can say the second wave here is a lot longer than the first wave. Now let's leave the possibility of this, instead of a three-wave pullback, could be end up as a five-wave pullback. So if this is the low for this entire structure here, this morning we have a low at 32,307, and if this caused the market to bounce back a little bit later in the afternoon, ideally to 32,820 to 33,000, then that could actually cause the market to complete this five-wave structure with a push lower below the morning low at 32,307. And if that's the case, the ideal place to buy will be somewhere between 31 to 32,000. Do watch out for the possibility here. Then we could possibly see another pattern going forward. But at least for now, for short term, I think there is quite a decent selling opportunity for those who like to trade corrective action. So this is representing a move that possibly can see at least maybe, if not 1,000 points, at least 800 points potential here. Okay, over in the Hang Seng, we have seen a market rebound from an ideal level. Over the last few days, I have been mentioning that if the market pulls back to 18,500 to 18,850, it could represent an area of buying opportunity. And the market traded to a low yesterday at 18,767.15, and this morning we see a rally attempt. So this actually is quite a strong signal here, meaning to say that from here onwards, there's a possibility market may have already bottomed, at least for now. And if this is the case, there is a situation in which the market may actually want to challenge this high here at 20,155. Remember, there's a pivot point here at 20,286. So that could be a challenge. And the more important level to actually overcome is this level here at 21,000. So if the market can actually take out this pivot point at 20,290 levels, the next barrier to higher prices will be 21,000. So that could be a possible outcome. But do remember, this is a technical rebound within a larger degree downtrend. So do watch, always keep that in mind. This is a counter trend move. Over in China, we are also seeing a bit of a rebound, although not as robust as the one that we saw in Hang Seng. Now, yesterday, remember, I did mention that on a risk reward basis, yesterday's drop into 38,800 actually offers a low risk, high reward trade setup. This is what I mean. If we buy on a dip towards the 3800, just put a stop just below 3,777, and if the market holds, it has the potential to rally back to test this 4,000 levels, if not the 3,940 levels. So that is the basis of my saying that yesterday drop was possibly a low risk, high reward setup here. Okay, not that I'm asking you to do it, because I don't trade this index for your information. Now, over in energy markets, we can see that energy markets has been relatively stable. After the news of the mutiny faded off, the market did not pull back aggressively. So we are seeing that although it has stabilized, market price has stayed stubbornly below $70 per barrel, but that is okay, because that means that the market may have another chance to challenge the most recent high at $72.68. Okay, something wrong with my tongue this morning. So anyway, I'm basically long the crude oil, and so I'm looking to bail out at a test of this most recent high here at $72.70. Okay. Over in precious metals, market has stabilized somewhat. The low traded last Thursday, was it last Friday? Last Friday was $1,910. So the market has stabilized. It has stopped falling. So that gives rise to the possibility that the market may have finished its 5-wave decline and getting ready to rebound. So the rebound immediate target will be somewhere around 1,970 to as high as $1,985. So do look out for these two levels for the market to come under selling pressure. So not sure whether the market has already stabilized and getting ready to rally. But as we approach the end of June, going into July, the risk of a sudden move in precious metals could actually happen, because we are beginning to see a little bit of change in the war in Ukraine after this mutiny. Not sure what else the Russian army is going to do. Maybe they're going to step up their attack now. We are going for a Jangular, for example, because of all these uncertainty behind the mutiny that we heard about over the weekend. So that is the background. Not so much on the fight against inflation, because we have seen that gold has been a poor hedge against inflation throughout this entire episode. So it's definitely not due to a hedge against inflation. I think it's going to be something related to geopolitics. Okay. Over in the silver market, we see silver has been a lot more stable. Silver right now is trading just under $23 per ounce. And if this continues, and if the market can actually take out this pivot point here, somewhere around $33, $23.35, then the market has a potential to go up and challenge the $24.50 level. So by and large, it's a buy. Okay. In the currency rate, we see that the dollar is beginning to rebound as well. Here, not this chart. The dollar index has actually collapsed from 104.60 all the way to 101.50 levels, stabilized, and then went up to 102.78 over the weekend. And now we have bits over the last 48 hours, we have seen a little bit of profit taking. And if this profit taking can actually extend a little bit lower to 102 to 102.15 levels, that will open up a buying opportunity. At the bare minimum, depending on where the low actually ends, okay, this could be a 3-wave rally with a potential equal to this entire move from 102.80 to 101.50. So that is quite a bit of a 120 points potential if you can buy on the dip here. Okay, so at the bare minimum, that is what can be expected. On a more optimistic level, we can see that the dollar may actually be looking to reverse. So if the dollar reverse, we possibly could see a much more robust dollar index going forward. Okay. Now over in the major currency, we can see that unlike the dollar index, which has yet to hit its ideal sweet spot to buy, we have already seen euro dollar has moved on in a mirror image, an exact opposite mirror image. Of course, by that I mean if the dollar is expecting to pull back, we expect the euro dollar to go up, right? And up it went, okay, to a high of 109.35 this morning, and this level is actually sitting in between this bracket of prices, which I think will be ideal for selling. And this level is 109.30 to 109.50 level. So we have a perfect move into this bracket of prices, and price has pulled back. Assuming this is the high, there's a possibility the market may actually dip lower at the bare minimum to test the 107.70 level. So that represents something like 150 points, 150 pips potential. So if you are keen to take this trade, you can do what I intend to do right after this recording. Okay, I'm going to sell this euro dollar for a move down to 107.70 at the minimum. Okay, over in the sterling has a slightly different structure altogether. Now remember, there is a potential 5-wave rally here, which potentially failed at 128.41. Now this is a little bit curious. I do not know what to make out of this failure here. The high here obviously is, if I do the wave analysis, the high here looks like a third wave and top of the wave 3 top here at 128.50 levels. And then we see a pullback here, and then this rally should theoretically finish with a move higher beyond 128.50, but it failed at 128.41 and then come back now. So like I say, not sure what to make out of this, but there is a possibility that this fifth wave actually failed. Okay, there's such a thing as a failure in the fifth wave, and this could be one of that. If that's the case, then we are looking for lower prices in sterling. Okay, however, if this fifth wave is still this fourth wave is still in progress, meaning to say there is still a possibility of a market rallying beyond 128.50, then that opens up another rally potential to all the way to 130. But by and large, the way I see it, that all I need for the market to do is for a rally beyond 128.50, and even a marginal breach of 128.50 will actually technically qualify as a 5-wave rally. And after 5-wave, we expect a corrective pattern to form. So it all depends whether you are keen to take this trade, because that will be in exact opposite of what I see for euro dollar. Normally, these two currency pair will move in tandem in the same direction. But right now, what I'm trying to say is that I'm bearish on euro dollar, but I am mildly bullish on sterling. So this is contrary. Okay, so again, this will be resolved over time. Okay. Over in the Aussie market, we have a big move in the Aussie market. Now, previously, I did mention if the market can drop to 0.6630 to 0.6680 levels, that represent an area of potential buying. And market actually stabilized with a low at 0.6663, and that was last Friday. Yesterday, market stabilized, and this morning we have a surge higher. So now this market is obviously telling us the bottom is in place, it's getting ready to rally, and this is actually quite common. We see market go up, pull back 50%, and then continue its original direction. So this actually laid the foundation for a much stronger rally in the Aussie. At the minimum, if this entire move from 0.69 to 0.6460 represents the entire length of this, we are looking from where we are at the low at 0.6660, potentially quite a sizable move. Okay, if you minus 0.69 against 0.64, we are looking at something like 450 pips. So this is something that you want to watch. If you have not already bought, I have not bought yet. Okay, I'm waiting for a minor pullback, ideally to test the 0.67. I want to get in. Okay, because the potential here is so huge that it is looking to be quite attractive from my perspective here. Now, dollar versus Canadian continue to slide, and this is no surprise. I actually alluded to the possibility in previous updates saying that dollar Canadian has a different structure. It may grind lower and lower. Ideally, the grinding of this market lower can actually end at around 130 to 131. So that will be a better area to position and buy, but do not sell at this current level because the risk reward does not make sense. It's beginning to look makes a lot of sense if I'm looking to buy. So the ideal level to buy has not reached yet. Okay, whether or not it can get to 130 to 131 remains to be seen. But if we see a very distinctive rally like what we saw just a while ago in the Aussie chart, then obviously that is the bottom. So do look out for the market signs, okay, going forward. Dollar yen is a different creature altogether. Like I always mentioned, the dollar has been falling against all currency throughout these few months, but it has been strengthening against one particular currency, and that currency is the yen. Now the yen, for that matter, has been weakening against all currency across the board. Against the dollar, it is currently dollar yen, what I'm talking about. Dollar yen is at a 6 months high against, whereas when you compare the yen in the euro cross, euro yen is at a 14 years high. So you can imagine the currency is so weak. Okay, it's not just weak against the dollar, it's weak against all currencies. So you can see that the dollar yen right now is so weak at 143.90 levels, which is almost 90, right? Yesterday we have a senior officer of the finance ministry in Japan coming out and say that this level is a little bit of concern because the rate in which the yen is falling is of concern, obviously, to the Japanese officials, because the last time it fell as great was last October, in which the Bank of Japan actually come into the market to actually intervene. How they intervene was actually the same playbook. We all know Japan has a large holding of US Treasury bonds. So what they did was they sell some of those bonds, take the dollar proceed and sell the dollar and support the yen. So this is going to be a playbook. If the Bank of Japan actually intervene, okay, which we cannot rule out entirely, that same playbook will be seen again. Now, what happens? Now, imagine the magnitude of the fall after the Bank of Japan intervened. From 152, almost 152 in the dollar yen in October last year, the market dropped all the way to 127.20, which is at the start of this year. So you can see the market dropped 16% from where the market intervened. Of course, they didn't intervene all the way. Just the fact that the Bank of Japan is intervening is enough to scare off the speculators. So right now, if the Bank of Japan comes in to intervene, for all we know, could be starting anytime soon, okay, because they are already hinting that they may actually do it. Okay, the exact word that this vice chairman of the finance ministry says, I think his name is Masato Kanda, okay, he did mention all options are on the table, okay, meaning to say that he's not ruling out if the Bank of Japan will actually intervene physically in the market. So that is the danger. So at this current level, the risk of buying the dollar versus the yen is pretty high. So if you are holding on to a long position, maybe it's time to take some money off the table. But we have no indication that the market is coming down yet. So maybe it's not time to sell. But for those who are really long, maybe you should take some profit. That would normally be what I do, to be on the sensible side. But there is no confirmation that the market is coming down yet. So look out for any kind of big move to the downside that could be signaling the Bank of Japan is in the market. So do watch out. Okay. Now, over in digital assets, we are seeing that this Bitcoin has been very, very stable. Now, there's a structural change in the behavior of Bitcoin here. The market hit a low of 24,750 on the back of all these negative news about the Security Exchange Commission gunning for the two biggest exchange. One is Coinbase, the other one is Binance, and those negative news has been more or less overlapped by the by news that the BlackRock, the largest asset manager, is applying or filing for a ETF for Bitcoin. So that was the first shot in the arm. The market actually stabilized, and the second round was news of three major US players, including Fidelity, in the market to actually set up an exchange. Okay, and for cryptocurrencies, so it means that going forward, they will bring along their high net worth clients into this marketplace, and that is obviously a very bullish development here. So now the market has gone up to 31,459, and we see a bit of a pullback over the last over the weekend itself. The low traded this morning was at 29,941. That could actually mark the bottom of this move here, or if we are lucky, the market may actually drift a little bit lower, ideally just below the 30,000 levels for us to buy. And if that being a simple pullback, may actually set the base for a rally higher. So this market is getting to be quite bullish. The setup is it does look bullish. However, if we do get a situation in which the market dip a little bit deeper, anywhere between 28 to 30,000 are, to me, a buying zone. Okay, so basically do look out for lower levels to buy if you get a chance to buy, because I think the potential here is going to be huge. So there you have it, and I'll come back to you with another update tomorrow. Bye bye, take care.